Hello traders and welcome back to my YouTube channel, IPDATrader. Now in today's video, we are going to be talking about supply and demand mitigations, okay? We're going to be going through various concepts that apply to these zones that you see in blue and gray that I use to determine my supply and demand zones, which are essentially POIs, which is where you want to be executing trades. So we're going to be talking today about things such as mitigation highs, mitigation lows, liquidity sweep, order flow breaks. We're going to be doing a very in-depth video on supply and demand mitigations, right? What are reoccurring themes or characteristics that each and every single mitigation has, and how we can identify that and potentially profit from that. So what I think I'm going to be doing specifically for this video is we're going to be jumping once again into the simulator, not sort of going through the replay tool. We're actually going to see candles print. We're going to be jumping into the software, and we're going to be sort of doing analysis, focusing on supply and demand mitigations. If you're currently struggling with that idea because once again you're unsure how to act, as price as an example over here trades into this area, you're not sure what you're looking for, how to determine potential breaks, mitigation highs, liquidity sweeps, then this video is going to function very well. It's going to help you a lot because you're going to be able to decipher what is it that you actually want to be looking for at your POIs at the time that price eventually reaches your area, such as this bottom one over here on GJ that I'm currently watching, this potential for shorts, this potential for shorts. So with all that being said, we're going to be jumping straight into the simulator. I'm going to be pausing the recording. I'm going to load up the simulator, load up a chart, go back in time, and we're going to be replaying price action, focusing on supply and demand mitigations. So if this sounds like something you want to learn today, make sure you stick to the entire video because once again, I'm going to be trying my best to provide you with valuable knowledge and information. So with all that being said, guys, let's get started with today's lesson. Okay, traders, so here we are on the simulator. As you can see, let me actually point this out for you guys. I've loaded up gold. Let's do this. So we have the 4-hour time frame, the 1-hour time frame, right? We have multiple charts. I'm more so going to be focusing on a little bit of the lower time frame as we trade into any of the blocks that we're going to be denoting, so that I can sort of go through the different concepts that I want to talk today, which is, as I've said before, mitigation high, mitigation low, liquidity sweep, and order flow, right? These are the different ideas that apply to every single POI mitigation, supply and demand. So this is what we're going to be going through right now. So just very basic, without getting into too much detail, when we're looking at this price action, there's obviously different things that caught my attention, right? One of them being this segment over here, right over here. Reason for that, obviously, this has actually cleared this low, which is pretty much relatively equal to this one. So this is a set of equal lows that has been cleared. It provided a shift in market direction, as you can see. So therefore, this becomes a potential area where mitigation might need to happen in order for us to push further up, right? This is just an idea. It doesn't have to happen. It could very well just keep dropping lower based on higher time frame blocks that may be sitting just below. But based on this time frame, that is an idea right there. Another idea, we have this high that was taken out barely with this wick on the right. So a tap into this area, as you can see, we've already been tapping into that, may cause price to drop, maybe short term into the other block that we've spoken about before we then push further up, right? That's just based on the 4-hour. But what we can see is that we're ranging. We had a rally. We cleared the lows on the left, so we provided a break. So therefore, this becomes a very, very good area. But once again, we're not going to be focusing on POI selection. This is just to give you guys a little bit of a context. The 1 hour shows this very same thing. We have that very same area over here on the 1 hour where we could look for potential POI mitigations, right? So that's what we're going to be doing now. We're going to grab the simulator. We're going to speed this up, probably use a 30 minutes, and we're going to let this play out a bit, right? So let's speed this up. We're now in market open, so we don't want to be doing anything. I'm not watching the charts at this time. I don't trade during this period. I'm more so waiting for Asian range development and London session, right? So that's what we're going to do. We're going to wait. We're going to speed this up. And just wait for whatever the price action is going to show us, right? So looking at this, there is a potential area to look out for mitigations, which we're going to be watching, which is this one over here. So if we get a tap into that, we're going to be watching this area as well, right? So for now, we're just within this area. So there's really nothing much to do here. Want to see if, yeah, so look, based on the 30 minutes, we're tapping into this zone. However, when you look at this, very, very big zone, right? You don't necessarily want to be working with a 100 pip zone. So therefore, what I like to do is refine it, right? You can refine it to the wick, the body. You can look at a lower time frame, and there you go. We have a much better refinement to be working with. So we're going to be applying the concepts to this mitigation as price trades into that area. And once again, there is no guarantee that price is going to hit this end drop. This is just to denote and show you how I go through my mitigations, right? So once price starts trading into that, we're going to be discussing that idea further if it does, right? If it now starts dropping, then oh well. What can you do? So we're moving into London Open. There you go. You can see the volume. We're now tapping into the zone. So the very first thing that I like to do is, once again, we're now in our POI. I'm going to look for key levels because this is going to make it much easier for me to identify rejections and work with. So fortunately, it is not giving me the price. Probably if I go through this, okay, so there we go. So we're going to say 1872, probably a key level. I usually stick to 3, 1 in the middle, 1 on the top. So we're going to be going through this as well. So this could probably be 1875. I look for round numbers because that's what I've seen over time make the most sense. And we probably had 1 at the bottom, which has already been probably invalidated, right? But nonetheless, we're going to stick to this. So 1870, there we go. And what we're going to be doing now is selecting every stuff over here. Whoops, let's clone that. Let's move that over to the 5 minute and the 1 minute. There we go. And now we're in a lower time frame price action because we've understood that we are within our higher time frame area, right? So I'm trying to see how I can zoom out a little. I'm not really used to MT4 that much, but there should be probably, there we go. So once again, here we are on a higher time frame block. Let's say as an example, you've decided to look at this area for potential shorts, right? So the very first thing that you need to notice is, do we have liquidity being grabbed into our area? And as you can see, multiple highs, those are being taken into our area, which is great, right? Because that's showing us that liquidity has been taken to potentially turn around over here. We do have some trend and liquidity starting to build. This is just the 1 minute, but the concepts still apply, right? So as price develops, and this is where we're going to be slowing down, we're gonna try and read the order flow, right? So if it pushes through, then that's just part of the business. I didn't take any trade, but we want to see a little bit of price action develop over here because we want to have some structure to work with, right? As an example, I would love to see a pullback, maybe create a new high into this key level, and then see it break, right? That would be a much better scenario. Once again, we're in a high volume time, so if this is gonna just plow through the levels, then that's absolutely fine as well. What we can see is that we're starting to see rejections, which is awesome, but that's not a good enough confirmation to sort of trade, right? So we're gonna speed this up a little. We want to see, so as you can see, we're starting to mitigate, we're starting to drop quite aggressively. I want to see if we break that structure point actually. So we did, right? We tapped into that. We reached our key level pretty much, right? We missed that by 3 pips. That's good enough, close enough for me. And now we've had a break on the downside, right? A single break right over here. Well, we're currently trying to break that. Now at this point, this would be your liquidity sweep, which is what we've talked about previously. Liquidity sweep into your block. We have a currently mitigation high over here, which is the high of the mitigation. We have potential order flow breaking over here. So if we do and we retrace, we could potentially look to go short, anticipating this to happen. So we're going to be waiting because I want to see if we do end up breaking below this 1 minute structure. So let's actually wait and see. So far we're respecting it, which makes sense. So yeah, let's see. Let's wait and see how price action is indeed going to develop. So it looks like we're going to try to break down again. Once again, not yet. We're still now trading within this range. As you can see, we've pretty much respected that area. So what I want to see now is, are we going to trade back into this block and drop? Or are we going to push further up? I want to see some signs of rejections over here to possibly look for a short, right? So every single mitigation is unique. So you have to be approaching that way, right? Even though the same concepts still apply. So we've been discussing such as mitigation high. Okay, so now we've broken below, closed above. Looks like a liquidity grab below the range. So we might wait for more information. This tells me that we might be potentially needing some more liquidity on the top to then drive further down, right? So let's see what's going to happen over here. And this is just based on the 1 minute, right? 30 minutes is showing clear rejections. So yeah, we're going to stick to the 1 minute. We've now pretty much broken below. There could be an opportunity here to go short with your stop above structure, because you're now not expecting that we're going to be pushing further up after, once again, remember, we've mitigated this area that we had previously determined. We've broken structure to the downside. We've had a rejection, so we could potentially be looking to drop further down, right? So let's slow this down. As we fill this inefficiency in this candle into this low, we might drop, right? And this is just an example. So since we're just simulating, we're going to be going with a short right over here. So let's go visual mode. Let's say we want to risk whatever it is that you're comfortable with. So let's say you want to risk 1%. Let's say you want to go short. So you don't want to take profit necessarily. Let's say you choose to have a 28 pip stop, which is pretty respectable for gold and the amount that it moves, and you're expecting this structure point to not get breached. If it does, right, then you know that you have to be out of the trade, and that price may be looking to target this or potentially even further up right over here. Right, so once again, just for the purpose of this video, we're going to take a short. I've already explained the rationale just based on, once again, mitigation. We're not looking at structure. We're not really looking at timing, daily cycle. We're just basing our decision on mitigation, right? So let me go through that once again. We have liquidity sweep, which is important, into your area. We have a mitigation high. We have an order flow breaking right over here. And honestly, you would want to wait for a deeper retracement, because this can very well retrace deeper before we push down, right? That's very much a probability, but for the sake of this video, let's say you want to go short as we break below the structure, and you are expecting price to push further up at that point. So let's keep this area, because they still may come in handy, this one as well. Let's once again denote the break right over here, which is when we broke below structure. So let's do actually that. Once again, this is probably not a trade that I would take on the live market, but just based on this video, this could be something to look out for, right? So let's actually speed this up quite a bit. So as you can see, price dropped pretty much close to 1-to-1. So depending on how you want to manage, there you go, right? Price is now dropping. There's an opportunity for you to manage risk, do whatever. It pretty much pushed over a 1-to-1. Now, if it breaks above this high, we're probably going to push further up. So you might want to manage risk at that point. But just once again, for the sake of this video, we're gonna let this run and let it do whatever it needs to do, right? But as it breaks above the high, we could possibly clear those eyes and look for a deeper retracement. That is something that could potentially unfold, right? So there we go. We can see we're now pushing up, which is great, because we do have some more areas that we're interested in and potentially looking at. So that is something to be paying attention to, right? And as you can see, gold is a very volatile pair. So if you're not quick enough, sometimes with your management, price may reverse on you and things like that. So there's different things that you have to be paying attention to, such as the news as well. We can see for the day that we do have some USD news, which makes sense. And as you can see, right, this is the area that we had on the left, which is this previous structure point before the break. So price could potentially drop from here as well and go further down, or we could look to seek the origin, which is always going to be, once again, your best bet, right? So we're just focusing on the lower time frame price action, and we could start a descent from here, but that's just once again based on the lower time frame. So we might as well push further up, further down, don't really know, right? So let's say let's do this. So let's wait a little. So now we're pushing further up. We're about to enter. There we go. So now we've tapped the origin, which is always your best bet. And as you can see, we're starting to reject, right? If you would have taken an entry over here, which is something that could have been very well possible, 25, you're pretty much at a 1-to-1 already, which is awesome. So that's a potential trade to be taken, right? As you can see, price is dropping at this point. That's just based on reading the mitigation, right? So we're gonna probably speed this up. Gonna probably let this play out a little bit further, and then we're probably gonna just review what we've done today, and we'll just go from there. So just once again, for the sake of this video, we could go short. Don't necessarily want to have a 50 pip stop loss, but there's a probability that we're gonna continue dropping now. And as you can see, price continues to drop, right from the area that we've had predetermined. We've already dropped like 100 pips, right, in pretty much 1 or 2 hours, I think that is. So it's pretty awesome, right, when you're able to sort of look at the mitigations and understand a little bit of what's happening, right? Now it would be definitely too late to go short over here, right, just based on the fact that we've already moved 100 pips, but whatever, just for the sake of this video. Once again, this is not your ideal stop loss, but just for this video, you probably want to put it up off here, but just because I don't want to have a 50 pip stop loss on the video, because I want to finish with the trading quickly over here, you probably would want to place it over here or above the POI invalidation, but let's just do it over here above this structure point. and let's say you go short over there, right? So it's again still a very high probability that it can drop. So there you go, you take the sell. Yeah, so pretty much it dropped pretty well from the entry point, about 40 pips with a 23 pips. So that was your 1 to 2 pretty much. You could have once again taken profit at structure right over there, or you could move to break even, which in this case you would have already gone stopped out. And yeah, that's pretty much how you do trading. You just want to be sort of understanding a little bit of what's happening and just looking to trade that way, right? So you can see now we're tapping back into the origin. If you would have put your stop loss above here, you would have been pretty much in profit again. As I told you before, you don't want to be putting your stop loss too close in order to maximize your risk to reward. That's not going to be optimal thing to do. Now, with all that being said, guys, I think I'm going to pause this right over here. I just want to quickly review what we went through because I think this is pretty good material to study. So the very first thing that we did is identify our potential area POI, which we did by looking at the 1 hour and the 30 minutes. We understood that we had this potential POI right over here, right? Where was it? Was it actually the 1 hour? Yeah, it was this, based on the fact that this POI cleared all these highs on the left and provided a move down, right? So as we traded back into that area, right, as you can see, we had potential key levels that we wanted to monitor to see rejections and order flow breaks, and that's what we had, right? Price traded back into the block. We started moving lower. We started breaking bearish order flow, right? If we go back to the 1 minute, we can see that this is our mitigation high. Whoops, I actually want to do something different. So we have mitigation high. We have liquidity sweep right over here. We have order flow break right over here, right? We have a rejection over here, break once again, retracement, potential area to short, move further down. We took a short over here just based on current market structure and the video. And as you can see, right, we took a short, price dropped right over there. You could have potentially secured, done whatever you need to do. As we said before, you're just looking at the 1 minute. We're not putting the structure together, which is key. So that's that. Then we identified right over here that we were mitigating this area over here. We said that, right? As we trade it here, there is a probability, very high one, that we're going to push further down. And that's what we did, right? We traded back into the area, we moved further down, we identified a rejection, so we went short, price dropped. Where did it drop? Well, it filled the inefficiency on the left of it, and it mitigated structure and then pushed further up into, once again, this origin over here, where it looks like we're dropping once again. Right, so with all that being said, I hope you enjoyed this little video. I did try my best to get the concepts across. As you can see, you just have to remember different things when looking at a mitigation, which is the when price is trading into a supply-demand zone and mitigating that to push the opposite way. You have to be looking at mitigation highs, which is going to be your reference point. You have to be looking at key levels, order flow, and liquidity sweep. Those are key concepts that will help you determine your POIs extremely well and how to actually act upon them and execute properly. So with all that being said, guys, I really hope once again you enjoyed the little bit of presentation. If you do have questions, feel free to drop them below in a comment in the comment section. I will love to go through that, not a problem. Feel also free to drop video suggestions. I can once again go through that as well. And if you enjoyed this, feel free to drop a comment and a like. It actually helps a lot with the YouTube algorithm. So I'm actually going to appreciate that. And yeah, with all that being said, guys, thank you very much for listening. Hope you enjoyed, and I will see you guys very soon. Take care, everybody.